Yeah, I think the only question I have is that like there are certain times you notice that in when you have a break of structure somewhere,
Yes.
but I notice is the lower one, like maybe if you go to a lower time frame, 30 minutes, there's a break that occurred. Let me say we're bullish like gold.
Yes.
A break occurred maybe say around higher up. Then if you go to a lower time frame, you'll notice a break down beneath the one that occurred in maybe 1 hour. You notice on that one in 30 minutes, but say lower down in structure. I noticed, I don't know, maybe it's my own observation that sometimes price tends to use the one that occurs first.
Okay. So
And
you mean price is on an uptrend going up, right?
yes, yes,
Then break.
yeah.
On which time frame? The 30 minute
Let's
time
say this
frame.
one is 1 hour time frame now, right? We saw
All
this
right.
break.
All right.
Now, I noticed if one drops to 30 minutes and maybe there's a shift that occurred before the one that before the 1 hour level, price sometimes tends to go to that level of 30 minute zone and then sell off.
I think I understand what you're saying, but I'm kind of confused. Let me check
Okay.
if there's any place that we have a good example of that. I think I might be understanding what you're saying. I might be understanding what you're saying. I'm just quite confused. Okay. Could this be a good example of what you're talking about?
Let me see. Yes, something like this. Yeah.
Whereby if you go to the 1 hour, you mean on the 1 hour there's the level here or something.
Yes, maybe that level then is that's the level then in 1 hour.
Yeah.
Then it,
Yes. Then you mean like one would think, okay, the thing is, like I said before, you need to know what you're looking for and know the time frame that shows you what you're looking for best, right? Like if you are right here on the 30-minute time frame, as you could already see what price did here on the 30-minute time frame. We were going in an uptrend. We're going in an uptrend, right? Let me quickly delete this. Okay. So as you could see here on the 30-minute time frame, price was giving you an uptrend, right? Then price shifts. Once price shifts now, the shift already occurred, right? If you look at here, okay, the shift already occurred, right? If you look right here, the shift already occurred. If you look right here, on the 30-minute time frame, it was clear enough that after price gave us our shift in structure, we had a liquidity that was printed. 1 hour time frame, like the 1 hour time frame, two 30-minute candles was going to make one hour candle, right? Two 30-minute candle make one hour candle. So on the 1 hour, that inducement wasn't present as of yet, right? So that inducement wasn't present as of yet. So, but on the 30 minutes, it was right there. It was clean. It was right there on the 30 minutes. The inducement was right there. If you go lower to 15, it was right there. So that was the reason why price sold from there. Now, anybody who decides to use this 1 hour level when price comes back, if you decide to sell off on this 1 hour level here, you are not wrong. You are correct, right? Your level is good because this will be your break of structure and this will be your liquidity inducement. But ask yourself, what is the overall trend? Like I taught you guys the market structure. Hope you guys haven't forgotten. We have what? Micro and macro structure, right? we use our microstructure to tell the macro structure. So on the macro structure, right, if you go to the 4 hours, which is our macro structure, our big time frame structure, 4-hour time frame. When you are on the 4-hour time frame, our macro structure, we can already see that this is what price was doing. Now, this is the next high to get taken out, right? This is our next high to get taken out. So the only thing that price was doing here in this case was pulling back inside to grab liquidities before the trend switches back to bullish, right? Price was pulling back to grab liquidities before trend switches back to bullish. So let's go back here. Okay, the price was pulling back to grab liquidity before the trend will switch back to bullish. Where is the area we're looking at? Okay, let me put this. Okay, so the only thing we're looking at here is price, right? Price taking out this liquidity and switching back to bullish. Now, at the time when price came back here, right? All liquidities we already swept. Price has swept all the liquidities in the range and is going for this liquidity up here. And at that time, it is no longer right to sell here. But let's say there was an instance whereby price stopped around somewhere here and pushed back all the way up here. Yes, you could take another sell. Most times, this one would even be a stronger sell than this sell. It might even do a sharp big drop, like boom, to the entry, to this buy level. But since this whole liquidity is off, is gone, this becomes what against the direction. It becomes a counter. And now you could see how price was reacting to it. Price reacted to that level because it was strong. So we had some reactions from there, but price couldn't hold on that level. Like price couldn't do any major move and hold from that level, right? There wasn't any major move, but price dropped from there. So if you were the kind of person that you could take an entry from there, or if you knew when to get out, that would be a good one. You should take an entry from there. You could take one entry from there, or if you know when to get out, like price gave around 280 pips from there. If you know when to get out, then you don't have a problem. So that was it. It was still right. But everything circles around what, which time frame were you looking at? Would it determine the information you were seeing at the time? So if you were looking at the 1 hour time frame, you probably wouldn't spot this. And that's why multi-time frame analysis is very, very important. Hope you understand.
Yeah, I do.
Any more questions?
Like this thing depicts what I was asking about. Let me see if I can see the area again just now. Just where we were talking about. Yeah. Okay. If you notice this one that played that this drop that occurred, we after we used that 30 minutes level, then we had another break, which occurred around can I even annotate? I'm not sure. I'm not sure I can annotate. Okay, let me see. We had a break here, right? Around that region, right?
Yes.
Now you notice normally there was this break, then we had the week, and we usually say this would have been our liquidity, then most people would want to enter from this point.
Exactly. You know, I explained this entry on the last class on Monday, right? On Monday, I
Okay.
explained this particular place where I told you guys that the way I look at my structure, I look at trends. I look at trends.
Okay.
Yeah. So you can take off your annotation. Let me show you something.
Okay, I'm coming.
I look at the trend, not just I look at the whole trend. So with this right now, if you took your entry from here, you're not wrong because it determined on the way you saw the setup. But I took my entry from here. From here. And why did I take my entry from here? Was simply because of the way I look at my structure. I look at the trend. So we have here a low like this. So this is where I have my shift. So if I have my shift right here, right, this is my inducement.
Yeah.
If my inducement isn't out, why will I look at a sell from here? Why
Exactly
would I
what I
look at
was
a
asking.
sell from here?
That I noticed sometimes, even if the most obvious break or shift is what moves, this is maybe that lower one down there is what most people would see. But there's sometimes there's
Exactly.
always
And that's
something.
why why I said every strategy need experience.
Yeah, exactly.
Because you could see this and you'll be like, oh, it's time to go full margin. It's time to go full margin. It's clean. It's clean enough. Time to go full margin. And you just end up losing all your money. And quite like, and this is the hardest part of trading is when you finally found a setup or a strategy that works, right? But you don't have the experience to filter out the best entries using that strategy. So in most cases, you end up losing money even when you are in the right direction, like price just kicks you out and then still plays your way. And it's something that's mentally draining for most people. When you see this, will be like, oh, break of structure, oh, liquidity. Oh, let me enter here. Price would, let me say you enter there, you can see how price taps, and then you can watch this particular candle, how price taps. You can see the rejection a bit before price written down. And while for some people might just sell right after price takes out this high. I don't know. Some people will just want to, oh, price took out this high, let me sell. Yeah. Well, with more precision, I was able to get the right entry from there because I consider trends. I don't consider what just any place. I consider the trend, the whole trend. And that's why I said that I use the most basic things, but I just know how to use it. Higher high, higher lows, trend, uptrend, downtrend, uptrend, downtrend. The entry I shared with you guys on the other day, the entry from here. Okay, the entry from here I shared with you guys on Friday. The only reason I took this entry was very simple, trends, right? Most people would want to look at this as their level. But the reason that won't work is because if you were looking at, let's say, the 3-minute time frame, you'd see that price kind of give you, or in a time frame that's lower than this, price give you like an uptrend during this area, shifted, give you a shift in structure from here by taking out this higher low. Let me erase all of this so you can see clearly. Okay. Price probably gave you a shift in structure from here of an uptrend. For people who look at, and then this might possibly want to be your level for those. And you can see how price really kind of used it, kind of made a drop. You get, but this drop didn't really sell because why? Price was changing direction. So Now, price gave you this mini uptrend from here, trended up a bit from here, then downtrend. Now, with this downtrend, this is where my shift is at, this one here, right? So this would help you choose your levels better. This is where I have my shift at with this downtrend. So my downtrend, most people, some people might see this as their break or structure or whatever, but no, I look at the trend. So when I look at this downtrend, this mini downtrend that was formed down here, this downtrend here, this downtrend with price, limit this and shift from here. It's easy. Then liquidity forms. And once liquidity forms, I look at which level is the best level for me to take my sell, for me to take my buy. And I can see that we have this 1 hour support here. Now, this is how you know why a level is going to hold. Now, for some people, they might see the 1 hour support here and they add a trend line to it and they just feel like, oh, this is why it's going to hold. Randomly, like, okay, this is why it should hold, right? They are gambling, it's random. But me, I understand a whole structural reason for why price should return here. For some of them, if price gets like here, and the market will always trick you. If price gets like to this open close and start reacting from there, some people will just buy from the open close, thinking that, okay, maybe price might miss my entry. Let me get in fast enough before price, in case it doesn't come all the way down to the entry. And quite frankly, price would deceive you by kind of reacting, because if you watch properly, when price was coming down, this was that open close level. Price kind of reacted to it, gave you a pin bar, even though like a hammer candle, whatever they call it, like a pin bar rejection, right? To
Yeah.
make you feel like
It wants to fly.
it's about to leave you. Yes, then you jump in and you. So when you understand the whole structural reason behind why you're picking a level, you could wait for it, even when price is. And then when you wait for it, it's actually fun, because when price starts manipulating and creating liquidity on other levels, you can like, okay, you understand why price is doing this, and you just wait. Because when price was doing this, I was like, okay, some impatient people, weak hands might be entering right here, right? Some people might see this pin bar and just buy immediately with their stop loss below the pin bar and they will get stopped out. Some people might even see this and this would be their first result. Okay, stop hunt, liquidity sweep, break of structure. And they'll say that, okay, liquidity sweep, break of structure, then the level. So price would manipulate a lot. But because I understand that price has to return back to what origin of the shift. And after the shift, there was liquidity. So I had to sit and wait for it. And price came, reacted, and you can see the reaction. After price tapped my entry, we went all the way all-time high, and even more entries. So you will look at trend, not just random. You won't just come around and say, okay, price break structure here. Then you want to sell from positive. No, that's not how it works. You look at trend, right? When you want to look, what should be in your mind is, oh, there was this uptrend here, coming right here of higher highs and higher lows, and then price gave a shift. Maybe this is liquidity. If this is liquidity, then so somewhere around up there, price might give you a something like that should be what should be in your mind, not just price break
Okay.
from here, and you want to just take a sell from there. So you look for the trend, and then that, and with you looking at the trend, it would help you know exactly where you have your shift. So like right here, Like right here, what you'll be looking at right here is this trend. This trend. So this is your shift. If you're looking at the 5-minute time frame, this was your shift in structure here, and this was your liquidity. And above your liquidity, price gave you a sell. But if you were looking at the 15-minute time frame, so you need a lot of experience to help you with this. If you're looking at a 15-minute time frame, that's also clean. So that's also clean. So I hope you're understanding now.
Yeah. I am actually grabbing it. It was just ultra last week. That was what I actually tried implementing in majority of the trades I took. Not just looking at the very obvious break or shift, trying to identify is there actually a shift, the
Exactly.
first shift that actually occurs. I noticed that's where price would always want to go to
Yes.
sweep the hanging liquidity and then drop if it wants to drop, or move higher if it wants to actually move higher. It might do some initial movement in the first one seated counters, but it will see take people out, then move to the one really where the first shift
Yes,
occurs and
exactly.
then gives the full movement.
Exactly. That's what price does. So, like you can see here, if you were looking at some other time frames, this would be what you would just see. A break from here. But when you look at this particular time frame, look how clean this particular time frame looks, right? There's an uptrend, price traded up, last higher low, broken, right? Then this would be what? Inducement, right? So if this is inducement, right? If this is your inducement, where would your next entry be? Where would the next entry be?
Just above the inducement, then that's the open close.
Yeah, except just above the inducement, because you have to check if price is already inside of the particular level, then you know that okay, like you can see here, price is already inside of this level.
Yeah,
So in most cases, it might not go higher to other levels.
definitely.
It might just sweep the liquidity, then sell off. And most
Yeah.
times, especially if you see FVG above the liquidity, a fair value gap, it mostly works like that. Mostly, if
Okay.
you do this, you will see the price will enter the level, sweep the liquidity. Once it gets to that fair value gap, it just moves. So most times, I'm beginning to incorporate that into my strategy to always put my entry just there.
Yeah, because there are times I missed one or two trades because I was looking at somewhere higher up, maybe a V shape or A shaped structure to sell from just above the inducement, but price just takes out the inducement and drops massively. And I'm like, this thing don't leave me go.
Exactly. So, like you can see here, that 30-minute zone from there, then after the 30-minute zone, you can see here, like this is the 30-minute zone. The moment you might have your entry here and you miss, the moment price took out the 30-minute zone, you can see that there's a whole fair value gap, whatever. Price just sold. So where you most likely leave your entry, you just leave your entry like above the liquidity. Since the liquidity is inside the zone, you can keep it above the liquidity, or in some cases you can go to a smaller time frame, like a 3-minute time frame. You can go to a smaller time frame and see if there's any level. Okay, very good. On a 3-minute time frame, this is something you can do. Go to a 3-minute time frame and see if there's any level that is just right above
Above
it.
it.
Yes.
Nice
So
one.
you can use this for your entry. And as you take your entry here, you can watch the drop from there.
Okay. Okay, then.
You can sell. So what would be your first target? Would be what? These liquidities, target them first.
Okay.
for about 400 pips. Target those liquidities out first. About 400 pips. Then any other entry can come. Now, look at this. Let me show you another example of what price does. Look at this. What did the price do here? Look at this. After this entry, you can see how price gave us a trend from here. Then shift from here. So let's take it back. Okay. So we have our shift. Like this. How do I shift from here? This is our shift, right? So after we had this shift from here, what did price do next? Price gave us our first pullback. Right? No, okay. So this is what I wanted to show you. This is what I wanted to show you, sorry. This one is better. So we had this trend in here. Like this, right? So with this trend, price gives us our break of structure. Right? And then our liquidity inducement, first pullback. So with this, where do you take yourself from? You could check the higher time frame to see if there's any zone. Right? Check the higher time frame, see if there's any zone right there. 15. Okay. Check 25-minute time frame. What is this? So where was the area I was looking at? Where was the area? Where was that area? Hmm. Okay. I guess it was here. Okay. So right here, as you can see here, you had a 1 hour open close. Seated right here. You can check 2 hours. Okay. This is even better. This is even better. 2 hours is better. This is why you need multiple time frame analysis. On the 2 hours, we had this open close level seated right here. 2 hour open close. 4 hour level. You can just check all multiple time frame. Okay, 2 hours and 4 hour are on the same points. So you can go back down to, and let's see. Okay, you can go back down to the 5 or the 3-minute time frame. Now, is this level just going to hold randomly? Of course not. There's a setup there. The entry model is right there. Right? Break, liquidity. Then we had what? Our level from a different time frame. Right? We don't have our level on this time frame, but on a different time frame. For people who trade like other blocks or something like that, they'll take an entry from here. Because this is the entry for other block people. They'll take this entry as their other block, right? But for us trading SNR, 2 hour open close with 4 hour open close is the entry. You can sell here. I think this was the FOMC trade. and send here, or you can keep your stop just above this high, about 32 pips, and watch your target trend. This is 500 pips. So you can see?
Yeah.
So you don't just come around. So if you were looking at something like this, you could say break a structure from here. Then what next? Nothing. You don't know anything you want to see anymore. Or you could say break a structure here, liquidity inducement, and you take yourself from here. Wrong entry. You get stopped out. So I look at trends. That's the structure. Look at trend. Look at the entire trend. Right? So now if I wanted to see the entry and I wanted to see a trend, and I'm sure that okay, there's no trend here, I'll just go down to the 3-minute time frame to ensure that I see if there's a trend. And on the 3-minute time frame, there's a clear trend and a clear shift in structure that price hasn't filled. This is a shift in structure that created an inducement that price hasn't taken. Let's say, had it been price has taken this inducement, maybe price did something like this, then price was already going down, then yes, I can consider the breaks. But with this inducement being left untaken, being left here unchecked, I can't consider any other setup till this inducement get taken out. Hope you understand. So this is still my setup, right? Then all these trends coming back, all this compression to the upside becomes my liquidity, my target liquidity when I'm selling. Once I sell, they are the targets. Hope it's clear.
Yeah, it is very clear. Very clear now.
All right, so I'll be ending the session soon. So I'll send the
Okay.
recording for those who didn't attend class. You're the only one who attended class today, nobody else.
Guess maybe they are busy or something. I don't know.
Yeah. So I'll
It's
send
all
the
right.
recording out to you. I mean to the group so everyone could watch. So those who didn't attend could also see and also learn from your question. And tomorrow we are going to be treating on liquidity. So we are going to talk about target liquidity and inducements and all the types of liquidities from tomorrow and next week. So that's what we're going to be talking about next. So have a nice day, bro. You can just
Thank you.
back
Thank you
and
very
just
much. Definitely. All right. Thank you.
All right. Bye-bye.